Good day, class. Welcome to another lecture in economics. I hope everyone is doing great and safe. Now, today I will discuss a new topic that we can relate to what is happening right now in our economy. This will focus on the concerns of our macroeconomy and its current status while we are in the road to recovery from this health crisis. As we all know, the pandemic brought by COVID-19 poses an enormous economic challenges in our country. Now, knowing the concerns of our macroeconomy is a good source of information so we can track the performance of the Philippines, especially at this time of the crisis. Now, before starting our discussion about the different macroeconomic concerns, first let me briefly differentiate microeconomics and macroeconomics. So when we talk about microeconomics, it examines the decision behavior of an individual. That's typically firms and household. Macroeconomics, on the other hand, deals with the sum of these individual decisions, where it studies not only the household income but the national income, not individual prices but the overall price level. And these are the main differences between microeconomics and macroeconomics. Now, there are four major concerns in our macroeconomic analysis, and these are inflation, unemployment, balance of trade, output, and economic growth. And we will discuss them each in the next slide. The first macroeconomic concern is inflation. So when we talk about inflation, it is the increase in the overall price level. So when we say overall, that's the price of all of the goods and services available in the market, and it will increase over time. Now, inflation is one of the health indicators of our economy, and keeping the inflation low has been the goal of our government. Higher inflation rate will tend to increase the cost of living, and it will make the prices of basic goods and services expensive, and that will decrease the purchasing power of money. This is why inflation is not good for our economy. Now, let's look into the state of inflation in the Philippines amidst this pandemic. Now, according to the Philippine Statistics Authority, or the PSA, the current inflation rate of the country as of August 2021 is at 4.9%. Now, also based on the table, inflation rate went up at the beginning of 2021, which is the highest since 2019. The Bangko Sentral ng Pilipinas, or BSP, they said that this number is manageable since it is within their target range, which is 3 to 4%, and that is by the end of the year, and also downtrend is expected in the remaining months of 2021. Now, economic policies are already in place to control the inflation rate of our country while we are recovering from the COVID-19 pandemic. That's it for inflation. Another concern in our macroeconomic analysis is unemployment. So unemployment rate is the percentage of the labor force that doesn't have any work or jobs. Now, measuring unemployment rate is essential to know how productive our human resource in our economy. It is also an indicator of poverty in our country. Now, looking into the employment rate of the Philippines in the middle of the pandemic, now based on the PSA Labor Force Survey, the Philippines unemployment rate, that is last July 2021, was estimated at 6.9%, and it is the lowest since the pandemic in April 2020. Now, this number is equivalent to 3.1 unemployed Filipinos. That's 3.1 million unemployed Filipinos 15 years old and over. The pandemic largely contributed to this number due to strict quarantine restrictions and health protocols that is imposed by our government. And this is also the reason why many businesses are still closed as of today. However, our government already placed projects like the Build programs and the vaccine that will stimulate our economy and will also bring confidence to our consumers to go out to do economic activities that will in turn will help in building jobs while we are recovering in this pandemic. Now, the next macroeconomic concern is the balance of trade. Now, international trade plays an important role in our economic today, especially at this time of the pandemic. Import and export are the main drivers of international trade. So if exports is equal to imports, then we can achieve trade balance. Now let's look into the trade performance of the Philippines for 2021. Now, since the Philippines are slowly opening up the trade through import and export, the total external trade of goods in June 2021 has grew to 26.8%, or equals to 14.84 billion US dollars, compared to the trade performance of the same month last year, which is at negative 16.4%. Currently, United States of America is our major trade partner for export, that is amounting to 1.09 billion US dollars export values, while the People's Republic of China was the country's biggest supplier of imported goods, valued at 2.25 billion US dollars. Now, this increase in the balance of trade is a result of slowly opening our economy to other countries, that is, building stronger ties in trading while we are in recovery. However, international trade measures and restrictions are still in place by the government in response to the crisis brought by the pandemic. The final concern in our macroeconomic analysis is the output growth or economic growth. So output growth is the main measure of our economy's doing. It can be measured through our country's productivity, which is the GDP or gross domestic product. The short-term growth of our GDP fluctuates up and down. Now, this trend is called the business cycle. Now, with the help of this business cycle, we can identify if our economy is expanding or in recession over time. Now, let's examine the GDP trend of our economy before and during the pandemic. Now, looking at the quarterly growth of our GDP before and during the pandemic, we can see that our economy has experienced a deep down decline or recession in the second quarter of 2020. This is the time where the government first imposed the national lockdown. As the months passed by and the government is slowly opening the economy and loosening the restrictions, the country's GDP is slowly increasing. So currently, the Philippine gross domestic product posted a growth of 11.8% in the second quarter of 2021. This was the highest since the fourth quarter of 1988, which posted a growth of 12.0%. So this means that our economy is slowly recovering from the pandemic given the vaccine and the economic policies lined up by the government. Now, the decline in our output growth is not new to our economy. So if you look at our history over time, we've experienced various declines since 1960. The worst was on between 1984 to 1986, during the balance of payment crisis and the revolution in the administration of former President Marcos. However, our economy was able to recover these crises, so as the other GDP declines after that. There are several possible economic recovery scenarios that our economy may follow from the crisis brought by this pandemic. Now, we might follow the V-shaped recovery, where our economy recovers but activity permanently lost. We also have the U-shaped recovery, where GDP recovers but slower than the V-shape. The swoosh-shaped recovery, where recovery is longer than V-shape but faster than the U-shape. We also have the Z-shaped recovery, where spending surge fuels GDP above pre-crisis level. We also have the W-shaped recovery, where restrictions lifted too soon, then the GDP suffers as more cases paralyzed our economy. And we also have L-shaped recovery, where the economy never fully recovers. Now, which recovery shape do you think the Philippines will achieve? Now, according to the forecast done by Respond PH, the Philippines may follow the swoosh-shaped economic recovery, where after a deep decline, the economy will slowly recover and the growth rate will be positive again. This is also in line with the forecast of the UN Department of Economics and Social Affairs, where the Philippines' GDP growth for 2021 and 2022 will increase, meaning that we will recover from this pandemic hopefully within 2 years, and that is the beauty of understanding our macroeconomic analysis. Now, in summary, the crisis brought by COVID-19 caused economic shocks in our country. The strict quarantine restrictions have resulted to various job loss, lack of source of income, and increasing prices. Hence, understanding macroeconomics is very important in analyzing the complicated forces which determine economic growth and sustain while our economy is in the road to recovery. Now, for questions and suggestions, you can comment it down below, or you can also message me directly. Thank you so much, guys, for listening. See you again next time, and stay safe.